Last week, I read this article which explains that BlackRock is increasing the weight of its investment in Asia, and particularly in China. I'm especially pleased because it has been a long time since I explained on this channel that China is an investment to secure the bond portion of one's portfolio, and that Asia has entered a great Ricardian phase around the Chinese power. To put it in another way, in Asia, the economy is structuring rapidly and Chinese demand is becoming larger and larger, stronger and stronger, and will soon be largely self-sufficient so that it no longer depends on the exports to the West. Nevertheless, this is an opportunity to talk about BlackRock, passive management, and finally about the security of assets in the West and in Asia. Come on, let's go! So BlackRock, what is it? In a nutshell, it's a company with the largest amount of assets under management in the world. We're talking about more than $8 trillion in assets under management. This company has been particularly successful thanks to the marketing of ETFs, i.e. index funds. With an ETF, as Jack Bogle, founder of the Vanguard Group, the second largest ETF vendor, says, to find a needle in a haystack, don't look for the needle. Buy the haystack. Basically, if you're not sure you can beat the market by picking your own stock, buy an ETF to buy the market. That way, you'll be sure to at least beat the market. Personally, I'm evolving a lot on ETFs because not everything has to be thrown away. As usual, as an investor, you have to be wary of bubbles, and ETFs can be problematic in times of bubbles. At the same time, everything quickly becomes problematic in a bubble period, you might say. However, if you use ETFs in markets that are difficult to reach, this can be very interesting. For example, in my letter, I use ETFs to buy the high-tech sector without having to outweigh big tech with specific ETFs. I also use them to buy the Chinese market, excluding Chinese government-owned companies. The objective is to invest only in entrepreneurs. But the problem in China is that the vast majority of listed companies have a rather weak track record. This is not surprising because everything moves very quickly, but as a result, it is difficult to find well-established sector leaders who have proven themselves. An ETF effectively allows you to buy the whole market. Another advantage to ETFs is that they are often the only way for individuals to access a specific type of market. For example, if you want to buy shares in China, it will cost you a lot of money because of the fees for individuals are often very expensive. With ETFs, you limit these costs. As for wanting to invest in India or South Korea, for example, I won't even talk about it. As a result, BlackRock and Vanguard have made a fortune on index management because it is very easy to sell. You go to an insurance company, a pension fund, or an institution, and you tell them, with my ETFs you will never make a mistake because you will always be like the others. It's very reassuring. You can fall asleep on it because even if the stock market crashes, everyone will have crashes and no one can blame you for being taken in like everyone else. On the other hand, the rest of the time you won't be bothered because you do as well as everyone else. This is institutionalized peace in the management of money. After that, the problem with BlackRock is their success. When you're managing $8 trillion and you have voting rights in the corresponding companies that give you a responsibility that's out of the ordinary in the markets, that's why all eyes are on them. They are no more or less evil than others. They are just immensely bigger. This implies that the day they do something wrong, it will also potentially have much bigger consequences. It is for these reasons that BlackRock is important. They are so big that you can't do without listening to what they think about the markets. Well, in this article, Ben Powell, the head of Asia-Pacific Investment Strategy, explains that he is particularly optimistic about Asia and China in particular. His arguments are quite simple for me to understand because they are the ones I've been putting forward for some time. China is the first power to restart after the pandemic in 2020, and all the factories are running at full capacity, while in the West, the question of a new wave of strict confinement is being asked, or that it is not already the case, as in the UK. As far as China is concerned, it is often pointed out to me that it is a dictatorship. Indeed, it is not a democracy. I will go even further. Fundamentally, in this great history, China has bypassed the scientific revolution several times and several centuries before us. As a reminder, China had a naval fleet immensely larger than the West and much more advanced ships. They had the technology to discover the Americas several centuries before us. They just didn't. China also discovered black powder, paper money, and they had discovered the main technological bricks to invent the steam engine in the 6th century. Except that, culturally, the Chinese do not like innovations because they generate social instability. In China, stability is a primary value of society. Individual freedom takes second place to group stability. Therefore, fundamentally, it is not in China and Asia more broadly that major innovations take place. I repeat, fundamentally, it is in a country like Great Britain or the United States that you have to invest if you want to be first in the innovations that build the future. Yes, except that China is also 2 centuries of misery that ended in 1978 with the arrival of Deng Xiaoping to power, which marked the end of the Chinese communism in the Soviet sense of the term. The policies of the ruling China have a very vivid recollection of this era, Xi Jinping first. That is the difference with our policies, which have all lost the memory of what it means to suffer. So, on the one hand, in the West, we are ready to do anything to push back the deadlines, while in China, they have worked 40 years to get out of their misery. In the end, China is ready to work hard to establish a new stability and regain its place as a historical empire. That is why China's priority is a strong yuan to stabilize this entire area of influence around it. This is why China is trying to break free from the Western agony. Finally, this is why I think that what I call extended China, that is to say China's zone of influence in Asia, is a zone in which it is preferable to have part of its economies while the West purges its accounts and comes to its senses. To conclude and give you the bottom of my thoughts, as far as I'm concerned, extended China is probably the zone where there are the least systemic risks because the economic outlook is favorable and China will always favor stability over breakthrough innovations that creates tensions in the population. The case of Jack Ma is very revealing of this reality. Faced with this situation in Asia, the West is prey to all its demons: over-indebtedness, interest rates at zero, and a lifestyle that exceeds its means at all levels. So yes, if we look at the very long term, the future of innovation may still be in the West, but for the next decade, it is clearly Greater China that will offer the greatest stability. On that note, see you soon for more videos. Ciao!
Thank you so much for watching. If you like my videos, please subscribe and don't forget to hit the bell if you want to be notified of the next episode. And if you want to invest in the stock market over the long term or diversify your financial portfolio, I'm offering you an analysis of the 8 European star stocks to have. Thanks again for watching and have a great day.